Hi, and welcome to Ones and Tooze, FP's economics podcast. Every week we take a couple of data points, use them to try to explain the world. I'm Cameron Abadi, FP's deputy editor, with you in Berlin, Germany, and as always, Adam Tooze, FP's economics columnist and Columbia University professor, is with us in New York. Hi, Adam.
Hi, Cam.
So, we have one segment for you all today. A pretty predictable topic, I would think. The data point is 26. That is the number of executive orders, a record of executive orders that Donald Trump signed on his first day in office of his second term.
I will sign a series of historic executive orders. With these actions, we will begin the complete restoration of America and the revolution of common sense. It's all about common sense.
Wasting no time on his first day of work, the president has pardoned almost all of the January 6th rioters. He's taken the U.S. out of the World Health Organization and the Paris Climate Agreement, and he has set a date for slapping tariffs on imports from Canada and Mexico. He says this is the beginning of the end of countries taking advantage.
Those orders
of the
included a
United
crackdown of immigration at the border, bringing down inflation, an extension to keep TikTok here in the U.S., and a major shift in energy and climate policies.
Those executive orders ranged from declaring a national emergency on the southern border to ending diversity programs in the government to exiting the Paris Climate Agreement entirely. But the changes extend beyond administrative announcements. There's clearly a new political and cultural hierarchy at work in Washington, most evident at the inauguration itself, with CEOs from various major technology companies, Google, Facebook, Amazon, Tesla, in the form of Elon Musk, of course, all of them in the front row of the inauguration in front of other political officials from Congress and past administrations. So that seems like a statement of its own about the new economic landscape, and we thought we'd try to consider what we've seen so far and what would still be to come in the new Trump economy. So to start off with, Adam, the inauguration itself and the presence of those tech CEOs at the ceremony. It's not just that they were there, of course, it's the way that they're talking about their new relationship with the U.S. government, the assumption of extraordinarily close cooperation with the U.S. government on their priorities and their business visions. And I'm curious about the precedents for that in U.S. history. I mean, no doubt there were previous instances of corporatism of this kind, but it seems to me that the companies at work would have been quite different ones, whether leading manufacturers or financial industries. And I'm curious how the nature of the tech industry colors this cooperation, the relationship that these tech companies have to the overall economic health of the country, the economic life of the country. What does it mean for the U.S. government to be cooperating with specifically tech companies in this way versus other kinds of companies? Is there anything distinct about these tech CEOs and their relationship to the U.S. economy overall?
The inauguration, Cam, was egregious. I mean, there were like a dozen billionaires, including members of Trump's own cabinet that were present at the inauguration. A bunch of them, were positioned, them and their spouses were positioned ahead of governors and members of Congress. We're not just talking about American money either. Bernard Arnault was there for a while, the world's richest man, the LVMH, boss, the the French luxury business. India's Mukesh Ambani was there. And we're also talking about not just, as it were, oligarchs, personally wealthy people, but top CEOs. So Tim Cook of Apple was there. Tim Cook apparently donated $1 million to the costs of the inauguration, not to the campaign like Elon Musk, but to the inauguration itself. It really was an extraordinary gathering of wealth. And in terms of your question of what's changed, what's also really striking is how many of these people have flip-flopped. Sergey Brin, for instance, of Google, who in 2017, issued a flaming denunciation of the new Trump administration and its immigration policies as fundamentally antithetical to U.S. Fundamental values, was meekly there at the inauguration. Perhaps the best quote I've read about this, I mean, it's been widely commented on, but this quote from Lloyd Blankfein, the former CEO of Goldman Sachs, I think this was from Davos, he said it reminded him of what happened when Napoleon escaped from Elba. I mean, this is when, Napoleon was sent into exile for the first time in 1814, having been defeated in Europe and after the disastrous campaign in Russia, and then they send him, rather ridiculously to exile in the Mediterranean. And in 1815, he escapes. And there's just this notorious instance where the legitimist press in Paris flip-flops from regarding Napoleon as the great ogre to suddenly, celebrating the return of the emperor. This then leads up to the disaster of Waterloo. I thought this was a particularly sort of historically resonant reference from a corporate baron in the US. It was quite funny to quote this. I mean, but I guess the question is, and the question you're asking is this really new? And I'm more skeptical on that front. I mean, the ostentation, the crassness with which, personal wealth is celebrated in the Trump camp, I think certainly is new for, recent decades. There's no denying this sort of cultural difference. Though the Trump family are wealthy, they're not in the mega billionaire class, but as we discussed in a previous episode, they do legitimately count in that group at the very bottom end of it. But is the idea of, a tight relationship between the American state, American government, and corporate interests new? I just find that an unpersuasive story. I mean, it's perhaps a reconfiguration. There are new people who've now, are more closely tied up with the US government. But in principle, I mean, this goes all the way back to the log rolling of 19th century politics. The American state machine was always notorious for the way in which it served business interests operating through Congress. 100 years ago, Herbert Hoover, first as Secretary of Commerce and then as President, loudly hailed the emergence of what he called the associational state, which was to tie the American government machine to business associations. The New Deal, though, of course, it did end up at loggerheads with powerful business groups. The New Deal, in fact, operated through strengthening business organizations so as to enable them to drive prices up, because it was thought this was the way to counter the deflation of the Great Depression. And then in the aftermath of World War II, after all, we had the growth of the military-industrial complex, which Eisenhower called out in his exit speech, which Biden was clearly echoing in a way. But it's also from that era that we have the cross-examination of Charlie Wilson, who was the CEO of GM, who made that famous comment that he was asked by the senators, could he imagine taking a decision that was good for our country, but that was not good for General Motors? And his response was, and it's important to get this the right way around, his response was, I don't really envision that ever arising, because for years I've thought that what was good for our country was good for General Motors. And then he adds, and vice versa. But the way he framed it, unsurprisingly, in front of Congress was, what's good for America is good for my business. And I think if you take at face value the self-conception of a Bezos or a Musk or a Trump for that matter, or a Zuckerberg, I mean, we may dislike their diagnosis of America's condition. We may not agree with it, but surely all of them would broadly say that what they think is good for America would also be good for their businesses. Now, can't emphasize strongly enough, we might fundamentally disagree with them about what we think is good for America. But somebody like Musk thinks that tearing up and disrupting the federal government is good for America at large, right? It won't necessarily be good for everyone immediately, but in the long run, it'll be good for America because it will become this dynamic place of innovation, and we'll all set off to Mars and, so on and so forth. Somebody like Bezos, I don't think fundamentally would disagree with this. What is good for America is ultimately going to be good for this extraordinary retail business that they've built, right? So, I mean, I think they probably... I don't think we're yet in a situation in which folks like that consciously look at the world and say to themselves, well, I've really got to screw the country so that my business is better off. I don't think the gap is that large. I mean, clearly from a left-wing perspective, you could say that that's exactly what they're doing. But I think in the minds of America's corporate leadership and large slices of the Republican Party, they still fundamentally believe in that formula, that they have to rescue America from the corruption of a certain sort of progressive liberalism that traces its roots back to the New Deal. But if they do that, the entire country will be the majority. In the end, everyone will be better off if they succeed, right? So I think that elision is still intact. And if we, there may be cynics, there are no doubt dark cynics all over the place, right? And there are certain lobbyists who really just pursue the interests of their sectional group, regardless of the whole. But my sense is that for the majority of the serious large-scale business leadership, as crazy as we may think their ideas are, they still see that connection and that identity as being true.
Yeah, that's interesting to me, because the connection you're drawing on there is a vision of ideology that the leaders of these companies have, and ideological changes that they may want to bring about in the country. And that's certainly a real effect and a real connection. But it's not the sort of material connection that other leading companies may have to the country and to their communities, right? I mean, when people in Germany talk about their leading companies, they're thinking about companies that provide stable jobs, that strengthen communities. They're thinking about connections on distinctly national terms. And is that the distinct reciprocal relationship that these tech companies are having, or are there slightly different terms?
Yeah. I mean, the GM model was extraordinary, right? It's the Fordist model of the mid-20th century, where you have hundreds of thousands of highly paid blue-collar workers working in businesses which bestride the world, that dominate world markets, that secure ample profits for their shareholders. Like, that model is no longer valid. But do folks like Musk, Bezos, Zuckerberg, Trump, for heaven's sake, have some kind of vision of a better America? I mean, I think it would be a failure of the liberal and critical imagination to simply deny it, because we don't agree, and clearly their vision is bonkers or even just stupid. But like, the fact that it's not plausible that they don't have that vision. There are smaller scale actors who may really just be trying to gouge, profit here, there, and everywhere. And certainly those organizations systemically operate that way, right? And are looking for edge and advantage. But if you stand back and ask, does Musk think that Tesla, for all its really hard driving labor practices, for instance, is good for America? The answer is clearly yes. He thinks it is a pioneering, disruptive company that will actually catapult America into a new and better future. He just doesn't have a social democratic equation in which that translates down to the existence and the pay and terms and conditions of every single person employed by Tesla. But that's a difference in, if you like, the understanding of what the Commonwealth is, what society is.
Yeah. It's interesting how one's vision for the country could be shaped by what one produces as a company, or how one produces, maybe, to be more specific. But to move on to another topic that's come up this week, namely Trump's favorite word, tariffs. Trump has promised tariffs repeatedly during his campaign, and now has promised to impose those tariffs, not just on Mexico and Canada, but 10% tariffs on China by February 1st is what he had most recently vowed. And obviously Trump imposed tariffs on China in his first term in office. And I'm curious, looking back at that experience, what we could learn from it. Over the course of that first term, tariffs were both imposed, but there was also some deal with the Chinese government to reduce tariffs. So I'm curious, what was the nature of that tariff reduction deal, if we were to think of it as a precedent? And what changed trade-wise, meanwhile, in the interim when it comes to China?
I mean, overall, tariffs went up under Trump, and particularly on Chinese goods. And the Biden administration maintained that and, in fact, doubled down using Section 301 powers to impose really punitive taxes on things like Chinese EV, which are effectively not being imported to America anyway and won't be imported to America under those terms. And the consequences of that are real. So Chinese exports, direct exports from China to the US, have stagnated or fallen somewhat. And so China has forfeited its position as a leading exporter to the US, with the EU, Mexico, Canada now being the 1, 2, 3 ahead of China in terms of trade volumes with the US. That's direct trade. What we learned was that China will play for tit for tat. So China will both negotiate and it'll play tit for tat. But really, from the summer of 2018 onwards, the Trump administration, number one, was on the front foot. It was the aggressor. It repeatedly threatened to raise tariffs. So what you do is you specify a tariff, 10%, 25% were the standard units that they did business in the first trade war with China. And then they would say that's going to apply to 25 billion worth of Chinese trade or $200 billion worth of Chinese trade. And you specify the numbers. These are their statistical classifications. It's going to apply to the following range of Chinese goods, and we're going to hit them with this. And the Chinese retaliated or threatened to retaliate. And what ensued were a series of negotiations in which the Chinese were constantly reacting to the American pressure, because the Chinese don't have a beef with the trade system. The Americans are the ones that do. And the result was the so-called Phase 1 deal, which was finalized between December 2019 and January 2020. It was subsequently sort of swamped by the COVID shock, which hits in February and March 2020. But it was a highly consequential trade deal, at least on its face. And Trump began 2020, the last year of his last administration, celebrating the fact they'd reached this deal, because what the Chinese promised to do, over and above the 2017 levels of imports from the US, which were the peak levels of imports up to that point, was to raise imports of American goods, a combination of industrial goods, agricultural goods, and services, by $200 billion. So this was a very substantial deal. It was going to be over several years. So the total extra business was $500 billion. So this was like, what looked like a huge win for American policy. It's a primitive kind of a deal, right? Because economists don't like to talk about, governments deciding there was going to be this purchase of, it's really a dirigiste directive, a top-down directive from the Chinese side. We're going to buy this stuff. And it didn't happen. Didn't happen, because COVID hit and world trade collapsed. And then since then, the Chinese have not honored that commitment. They are at, according to some estimates, about 60% of the level of imports that they promised to make. So they're almost half short of where they were supposed to be. And one of the threats hanging over the current situation is the Trump administration simply starts its second term by saying, right, where are we on Phase 1? And we're nowhere close. And so this gives us cause to impose punitive, tariffs on the Chinese. The Chinese, you could say, reneged. The other thing to say is there was COVID. There was the tech trade war, which came on top of this, which the Chinese would presumably say voided the basic premise of cooperation. And then, after all, imports are, at least in part, a private business issue, and the Chinese government doesn't control in a directive way the entirety of the Chinese economy. It can if it wants to, but it actually has to make an effort to do it. And in this case, it didn't see fit to do it. So the question now is what will happen next? There's a whole variety of different fronts that the Trump administration can move on. In 2019, it also attacked the Chinese on currency manipulation. So that's another element of the unsteady trade relationship between the US and China. Are the Chinese manipulating their currency to keep it too low, make it too competitive? Right now, there's very little pressure in currency markets for the Chinese currency to revalue upwards. So that's probably not the direction to go in. But the Trump administration, you never know what they might do. And the other thing that's really going to be high on the agenda are two other points. One is diversion. So did the Chinese businesses, the ones which the Chinese government doesn't in micro detail control, were they simply smart enough to say, right, if all of these tariffs are being imposed on direct exports from China to the US, how about if we divert the trade by way of investments in Vietnam or in Mexico, or simply just pass-through deals where Mexican companies buy Chinese stuff? And there are suspicious increases in America's bilateral deficits with Mexico, but above all with Vietnam, which has emerged as a huge trade surplus country. And there's very good reason for thinking that what's really happening there is trade diversion. And then the new agenda of the Trump administration, and there was always an element of this the last time around, but it's much more vociferous now, is linking tariffs to other issues. And one is TikTok, which is like a daily preoccupation of American politics. TikTok's CEO was one of the business people present at the inauguration, unbelievably. And the other one is fentanyl. And insofar as Trump decides to make an issue out of what is in fact the subsiding opioids epidemic in the United States, he could tie, punitive tariffs on China to demands that Beijing does more to interrupt the flow of drugs. So this is a very messy situation. There are hangovers from the previous period. The previous period suggested that Beijing was willing to do tit for tat and then negotiate. There are moments when Trump sounds as though he's still looking for that, right? He celebrated his recent phone call with Xi as very productive. There's the possibility of kind of arranging something, but we just don't know yet how this is going to play out. It is extremely early days. And even if Xi and Trump are open to some kind of deal, it's not at all clear that the hawks in Congress or in the national security apparatus in Washington, who have become much more powerful than they were in the first Trump administration, whether they will really play ball.
Okay, so I mean, even if we set aside what's going to happen in the medium or longer term with respect to these tariffs, I'm curious what sort of effect the very talk about these tariffs and the announcement of the plans for the tariffs, what effect that's already had or is having on the economy in the U.S. and elsewhere for that matter. Do markets already respond to these announced plans, and how? Is it the value of the U.S. dollar that's the mechanism? Is the dollar already affected, for example? How does this play out exactly?
So, yes, the Trump talk about tariffs already strongly impacts the global economy. And one channel for this is by way of the dollar. And there's a variety of different mechanisms here. The sort of simplest from a kind of, bare bones kitchen sink economics point of view is to say, right, if you impose a tariff, what this does is to reduce the demand for foreign goods. If you reduce the demand for foreign goods in the United States, there are less people offering dollars in exchange for foreign goods and for foreign currency, therefore, to buy those foreign goods in. And so, therefore, the exchange rate of foreign currency relative to the dollar falls. The dollar actually gets stronger as you impose the tariff. Now, this is a complicated effect because it has the effect of making foreign goods cheaper. So, to that extent, the American consumer can buy foreign goods cheaper because of the exchange rate effect at the same time as they're paying more because of the tariff. So the two things offset each other. So the tariff may not actually work to reduce domestic demand very much. Whatever foreign goods the Americans buy will be easier to buy because the currency has now adjusted. What there is clearly is a negative impact on American exporters. So because the currency is revalued, it makes it more expensive for foreigners to buy American goods. And so you can have a really perverse effect where the American tariff causes Americans to buy fewer foreign goods at the same time as the appreciation of the dollar causes foreigners to buy fewer American goods, and we have a downward spiral. So this is there, and you kind of can see this in the markets. And right now, when Trump talks hard about tariffs, the dollar rises. When the pressure comes off, the dollar falls. So following the inauguration, because they didn't do anything dramatic on tariffs, the dollar actually fell. So the markets are pricing in protectionism, and when they fail to get what they expect, the dollar falls. Now, the dollar falling or the dollar rising also has a further effect, which is simply that it produces uncertainty within the world economy. And the uncertainty per se is problematic. And one of its effects is to drive people into dollars. So there's a kind of perverse effect where the more noise and the more uncertainty that the Trump administration creates, the more the dollar is strengthened by that. And that itself then becomes paradoxical, because one of the things we know that a large part of the Trump administration would like to see is a weaker dollar, because that would actually make American exports and the industrial firms which they imagine making those exports stronger. And so the market's standing back at this that go, we just don't understand how this is going to work out. Some people in the Trump administration go as far as to take the Michael Pettis kind of position, which is that America ought to tax foreigners who want to invest in American assets, because ultimately it's that flow of foreign capital into the United States which pays for America's trade deficit and causes the dollar to be chronically overvalued. So there are people, his chief economic advisor is somebody in this camp, Stephen Miran, who's going to be the head of the Council of Economic Advisors, is on the record as saying that we ought to consider, the United States should consider charging foreigners to invest in American treasuries. So at that point, your sense of the coherence of this program becomes very blurry. And one of the big markets where we are seeing the consequences of this combination of noise, upward pressure on the dollar, driven by increased uncertainty, is the biggest financial market of all, which is the market for fixed income and above all for US Treasuries. Because what we're seeing in US Treasuries, and we should do an episode or a segment, it's quite technical, but it'd be worth spending some time on to explain what's happened in bond markets, because people will be feeling it out there. Whether in Europe, whether in the United States, interest rates are going up right now because bond markets are selling off. And one of the reasons that they would sell off bond markets is if you have higher inflation expectations, and protectionism would suggest that we're going to have more price pressure, though exactly how large that effect is quite unclear. But above that, there's a thing called the term premium, which is simply a measure of the degree of uncertainty about the future. And the longer you go into the future, the larger that gets. But also, the more political noise you have, the larger that element gets. And the term premium has increased very dramatically in recent months. And so this is a market where we are seeing a penalty being paid right here, right now by borrowers, including the American government, for increased noise and increased uncertainty. But the bottom line here across so many of these different issues is we have to wait and see. It's too early to tell. But are markets, to come back to your question, are markets already sensitively registering what's going on? They absolutely are, yeah. On a minute by minute. If you watch Bloomberg or one of those kind of channels, it's just all anyone is talking about right now.
We're going to take a quick break right here, but we will be back in a second to continue talking about Trump's first week in office. So another issue that's been legible in these early days of the Trump administration has been a clear commitment to opposing the transition to renewable energy, and at the same time, a commitment to the support of the fossil fuel industry. There has been a declaration by Trump of an energy emergency, the details of which, are widely seen as supporting the fossil fuel industry in the U.S., and a whole host of measures that disadvantage renewable technologies. I'm curious, Adam, if we were to take a step back, what is the cost of these sets of commitments? Was it in some ways already too late for America's renewable energy industries or its green manufacturing or its clean tech industries? Was it too late for them to compete versus China's industries in those same sectors? Is this kind of ceding territory that had already been lost in some ways? And what would it mean for the United States to specialize in fossil fuels right now amid this global energy transition that's happening? What kind of role could America be carving out for itself here?
I think this is a helpful shift in perspective, because unlike the areas of foreign policy and tariff policy and policy towards the dollar, this is actually one bit of the Trump agenda that we're pretty clear about. In fact, I think there are three branches that we're pretty clear about. One of them is a push to further lower taxes and maintain the tax cuts of the first Trump administration. The second one is deregulation across the board as far as business interests demand it, wherever they demand it pretty much. And the third element, in fairness to the Trump people, what they would say, they would call it, is rolling back the large, unprecedentedly large subsidy packages which the Biden administration put in place to accelerate the American energy transition. If you ask Trump people whether or not they like cheap electricity from solar and wind, most of them, I think, will probably say, well, yeah, sure, it depends on the terms and conditions and whether the batteries really make it worthwhile or not, right? They don't per se oppose the electricity energy transition, though there may be sectional interests that do. But what they oppose vigorously is what they see as a warping of American energy policy towards green energy solutions, which they regard as sort of the ideological fixation and fads of American liberals. And when they say there's an energy emergency, which is truly a bizarre way of constructing American situation, again, if we're to understand them, I think what they say, what they mean by that, is that America's rapid economic growth, and especially the new fintech, AI, data center driven elements of the economy, need a lot more electricity. This is a new condition. For decades, the scale of electricity production didn't need to go up. Now it does. By historic standards or by Chinese standards, it's not a very big increase, but it is an increase. It takes time to build that electrical generating capacity. And when they say there's an emergency, their claim is that the misguided policies of the Biden administration obstructed the more efficient and more rapidly developing areas for power generation, which they used to argue for coal. There's very little advocacy for coal, relatively speaking, in the Trump administration this time round. But clearly what they favor is a technologically open, this is how the German liberals would call it. So basically gas, and nuclear is a big new kind of fad. And that's what they're describing as the energy emergency. And that's what they're going to push down. I mean, I personally was always skeptical about the claims of the Biden administration, to come to your question about international competitiveness, which conflated, in my view, very unhelpfully, the green energy transition, which is absolutely essential, with green industrial policy, and then even more unhelpfully, the idea that a green industrial revolution was somehow going to fix, the ills of the American working class, what they would call the American middle class, right? That's a conflation that doesn't make any sense, never made any sense, for the reasons that you hinted at, which is that in so many key areas of green technology, America's a laggard, right? It's not even at the races in most of these areas, and the Chinese dominate this area. So America, as a huge consumer of power, should be in the business, always was my position, of importing as much as possible, much cheap capacity as far as possible, so as to accelerate the green energy transition, but not to conflate it with an industrial policy, let alone a social policy. The Biden noughts, of course, argued that this was politically infeasible, and the only way to sell the green energy transition was by coupling it with a vision for American society and industrial policy. I think it's been demonstrated that that was a political gamble which hasn't paid off. The underlying continuity in any case, however, whether we're looking at the Biden administration or the Trump people, is fossil. And this specialization of the United States, as you put it, in the fossil sector is in no way new, right? It's a trend which emerged in the 2000s, there's powerfully in the 2010s. And it's centered on fracking, the new technology of the exploitation of various types of unconventional American oil and gas reserves. And it has transformed the global energy economy, and America's energy economy in particular, so that under Biden, the United States became not just the largest oil and gas producer, certainly the largest gas exporter, LNG exporter, and the largest oil producer, but by a really large margin. Currently, in 2023, 2024, America produced 50% more oil than either Saudi Arabia or Russia, right? So America has emerged as this huge champion of fossil fuel production under the Biden administration. Trump is, in a sense, just inheriting that. This is the continuity of America's economic development. The only reason why we don't think of America as hyper-specialized in this area is the rest of the American economy is so big, right? The fact that America is by 50% the largest oil producer in the world doesn't, we're never going to call it a Saudi Arabia or a Russia, because America has such a diverse, such a large, such a rich economy. But if you look at Texas, for instance, whose overall economy is about the size of Spain, Texas is the number 3 oil producer in the world after Saudi Arabia, and then comes Texas. Texas produces twice as much oil as Iraq, the number 2 oil producer within OPEC, right? So if Texas was in OPEC, it would be the second largest oil producer after Saudi Arabia. So is Texas specialized in oil? Absolutely, like in a really, really powerful way. And unlike Saudi Arabia and Russia, the crucial thing about the American oil industry is that its output, enormous as it is largely needed to satisfy domestic consumption of oil. Now, this is a crude statistical analogy because oil is not equal to oil. And so there's large flows of oil in and out of the United States because refineries in different parts of the world prefer different types of oil. But the net export of American oil, because America is now a net exporter, is only 2.5% of production. So what this tells you is that America really floats free from the rest of the world economy in terms of its oil economy. It is to think of the US as a sort of self-sufficient fossil fuel oil-based economy is a completely, it's not even so much a vision as just the facts of the situation created by the fracking boom over the last 15 years. And the Trump administration, unlike the Biden people who were kind of schizophrenic about this, they tried to sell themselves as a green energy power whilst presiding over the emergence of this new fossil fuel center. The Trump people own this, right? This is what they think of as energy independence. And indeed, they want to talk in terms of energy dominance. America is never going to be the dominant oil exporter, but it is the dominant LNG exporter already. And that gives them considerable sway over a number of gas importing countries worldwide.
Yeah, that is, I suppose, in the longer term, a distinct position to be in, I guess.
Yeah, it's unlike any other country. I mean, it really is a case of American exceptionalism, right? There is no other country that has this essentially huge consumption, huge production, and it's essentially self-sufficient. It doesn't need to import, and America doesn't need to export really either to maintain an oil-based energy system.
What it needs to do, if I understand correctly, is maintain demand. I mean, it's going to be in the position of having to encourage demand for fossil fuels, right?
And since EVs are going nowhere in the American market, right, and the American auto industry is also ran, like it's in third or fourth place in terms of the development of the EV model, and because of the giant petrochemical complex in the United States, the demand for oil is relatively stable going forward in the US.
Well then, finally, I want to turn to a more general question, which is based on another of Trump's priorities, which in some ways could be described as weakening the rule of law. We've seen Trump already pardon his supporters who ran riot on January 6th, but also we've seen him reduce the independence of the Justice Department, vowing retribution on enemies, politicizing the justice system. He seems pretty committed to weakening the rule of law in those ways and others, and I'm curious whether studies in history and economics show that weakening the law in this way tends to affect economic growth one way or the other. Does it impair economic growth in any legible way? And do companies operating in the economy, do they care if things like this happen in terms of the structure of the rule of law?
Yeah, I mean, I'm not going to suggest moral equivalence or that, argue that there's two sides to, every story. But I mean, to understand the mess that the United States is in, I mean, the politicization of the law by the Republicans is, of course, justified in terms of their profound, and I think it really is a profound belief that the legal system has been weaponized by liberals, right? And has been weaponized by liberals both over the long run to force through cultural change in the United States with the historic shift in the balance of the Supreme Court to drive things like affirmative action and civil rights and so on, which conservative Americans who presumed they controlled the law suddenly discovered that the law was this agent of profound change. And if you want to understand the GOP coalition, the Republican coalition, you can't avoid that deep history where they feel that, as it were, the balance of American society was fundamentally shifted and law was instrumentalized. And then more recently, they're convinced, after all, that Jan 6th aside, that Donald Trump himself is the victim of systematic, lawfare. And Clinton, I mean, I think the Obamas are basically exempt from this, but Clinton and Biden are both, protected by a shield of FBI collusion and so on from investigations into the more or less corrupt activities of their families, right? We may find this crazy, but that is the absolute conviction. It's one of the things which makes Republican Americans Republican. And if you ask them whether they think the election of 2020 was stolen, again, very, very large shares of the Republican voting American population believe it was. So that's the scale of the problem, right? The problem is not just that there's one side that is abusing the law, it's that both sides are now convinced that the law is being abused. And do we think that situations like that, in which the fundamental legitimacy of political processes and the law are being undermined, do we think those over the long run are bad for economic growth? Yes, we do. Or at least a certain sort of telling of economic history does, and it's the one that was given the Nobel Prize last year. It's the Acemoglu and Robinson story, which they've outlined over successive books, for which they won part of the prize, with Simon Johnson sharing it with them. But the Acemoglu and Robinson story is a story about property rights and the formation of inclusive and large-scale coalitions of power holders in societies who all buy into a certain conception of how the law functions. It doesn't have to be right. You just have to build this powerful coalition. It doesn't have to be equal, but it needs to be encompassing. And quite consistently, they were actually, you might describe them as having been part of the resistance during the first Trump administration. They wrote numerous op-eds saying that under Trump, the American polity was drifting towards a system of oligarchic subversion. I mean, I find this a not altogether plausible story over the history of America's political economy. Not that there isn't, various types of oligopolistic political economy taking shape, but the sort of exceptionalism of the Trump era, I find a little harder to really convince myself of. I mean, what was clear in 2020, as far as what corporations themselves want, because that's rather different from a bunch of economists looking at the world, what corporations themselves want is various types of predictability. And during the transition of 2020, when we had a Republican incumbent and a Democratic victory, the leadership of America's major corporations was quite vocal. And it was articulated by the resistance, right? Timothy Snyder and Sonfeld at Yale, convened these meetings of American CEOs behind the scenes. There was a lot of work going on, I think, between the trade unions and American corporate leadership. Because it's really difficult to run a large corporation with a couple of 100,000 employees if there's massive polarization akin to a civil war in American society. And so corporate leadership did express its commitment to, due process. But since there's been no fuss this time around, because the Democrats have not contested the outcome, because the outcome has been very clear, we've heard none of that. And what we've seen instead is this, where we began this conversation, this extraordinary parade of American corporate leadership, which I know from behind the scenes conversations 6 to 12 months ago with very, very prominent leaders who are being very, very widely quoted right now, in closed door meetings with their own, top 300, top 400 business leaders, were vociferous in their criticism of Trump. I won't name names for obvious reasons, but I was in these conversations, and it was quite clear that they were profoundly worried about the direction that a Trump administration would take the US and the world economy in. All of a sudden now discovering a very different hymn sheet to sing from, singing a very different tune. And it's quite remarkable, especially given the fact that he's a convicted felon, right? I mean, this is not somebody that normally senior business leadership and previously has shown anxiety, but it's power. It's about power. I mean, Trump is the power. Trump and his entourage now dictate the terms, and you simply cannot risk, if you're the leader of an exposed large-scale organization in the US right now, the risks are clearly seen to be too large. And this is the moment where this tips, right? Where you move from a situation where in 2020, they were quite willing to stick their heads above the parapet and say, no, the transition must go ahead, to the reality now of a Trump administration that can inflict pain and has announced that it will inflict pain on those who do not go along. And so at that point, corporate leadership, they'll even say things like, we have a fiduciary obligation, right? We have an obligation to our shareholders to ensure that we go along. And it's sort of the flip side of the story you were asking about at the beginning. One of the questions is corporate influence shaping policy? And clearly it is. But we shouldn't underestimate the extent to which on culture war issues, notably diversity, equity, and inclusion, but also on climate policy, it's running the other way round, right? Now, all of a sudden, whereas a couple of years ago, the attitudes of politicians in Texas, Republican politicians in Texas, were seen by Americans' corporate leadership in New York or San Francisco as being, from a different planet. Now we have huge mass defection of all of American high finance from the climate coalitions around, the efforts that were put together in the last 3 or 4 years to tie very big money to climate politics. All of that has collapsed. And we've seen, very, very large American corporations abandon the diversity, equity, and inclusion agenda wholesale of their own accord, even before being bullied by the Republicans.
I guess then this fundamental desire for stability or consistency, that means that they're invested in Trump's continued hegemony, right? This is not a simple matter of opportunistically switching from election to election, I guess. Instead, it sounds like it's a kind of investment for this side, at least for the foreseeable future.
Well, I mean, it's difficult. There is, I think, a purely opportunistic element. I do think they switch, and because power switches, there is a real force of democratic politics here, which causes them to switch. But in a sense, there's sort of repertoires they can draw from each side. And there are elements of American business which actually believe, for instance, in the green modernization agenda. There are parts of American business that understand that, a white-dominated, anti-black culture will not actually work for large parts of a very, very diverse society, right? So there's that strand. And then there's another repertoire they can also draw from, which is to say that corporate interests are best served by low taxes, deregulation, and a government that celebrates billionaires. And both of those are in some ways structurally founded, right? Both of those have deep logics to them. And so what we see under the pressure of democratic politics is that corporate leaders first draw from one repertoire and then from the other. And if America, the United States, was a small economy, right? If it was an economy where you could, in a sense, opt out, that would be one thing, but you simply can't, right? Especially it's the largest, most dynamic economy in the world by most financial measures. So there's no option. And B, of course, all of these players are American domestics. They may, in many cases, have large businesses in the wider world. Elon Musk is going to be a very interesting case because obviously Tesla is hugely exposed to global forces and notably to China. So we're going to see how that plays out. But a lot of that, I think, Musk maybe not as successful as this as Apple, but a couple of episodes back we talked about this. Behind the scenes, you'll see lobbying where they try and soften the aggression of the Trump administration so as to preserve corporate interests. But they are caught. They're structurally caught because America is such an and it's true for businesses all over the world. Like you were seeing it, the tone has shifted notably, for instance, in Davos this week. Because America's not an option. And so you have to be able to operate in the US. So then you're caught between these two different versions of reality. And obviously corporate leadership would like to have it both ways. It would like to have all of this in some lovely combination. It doesn't really want to take a position, but as American politics polarizes, they're forced back and forth.
Well, we'll wrap up this conversation for now. We'll be talking about Trump again, whether it's next week or not. It depends in part on what Trump exactly does in the next week, I suppose. But for now, we'll take a break and see you again next week. Ones and Tooze is written and edited by me, Cameron Abadi, along with Adam Tooze. It's produced by Claudia Tatey, Laura Rossbrow-Tellem, Rob Sachs, and Dan Efron. This show is made possible through the support of foreign policy readers. If you're interested in news and analysis from around the world, consider subscribing. Listeners to Ones and Tooze even get a 15% discount. Just go to foreignpolicy.com/subscribe and use the promo code TOOZE at checkout. That's TOOZE. And listeners, as always, we love getting your feedback. You can leave voice messages on the Ones and Tooze homepage on foreignpolicy.com or email us, podcast@foreignpolicy.com, or you can tweet us. That's @OnesandTwozePod. Thanks very much for listening, and we'll be back in your feed next week.